Hey, what's up, y'all? It's your boy Al, the owner and founder of TICKR Finance and TICKR Apparel, where our mission is to close the wealth gap in the U.S. through crypto assets and dope fashion. And so, as you guys are aware, there's been a total meltdown in the crypto market, and the stock market is crashing. And I have some not good news, but before we get into that, you guys go visit tickapparel.com, learn more about the mission. Again, we are the only YouTube page that is inspiring and encouraging uh, wealth generation through crypto assets and dope fashion. So if you want to get involved, if you want to dial in and lock in, make sure, man, y'all go visit www.tickapparel.com and learn more about the movement. Again, I appreciate the love and support. And let's go ahead and get into this. Let's talk about why y'all here. Uh, that's killing me. Anyway, to talk more about why you guys are here. The crypto market is getting destroyed. The stock market is getting destroyed. It's all bad. And so I'm gonna pull up some charts here, and we're gonna go through them. And so the first one is gonna be Bitcoin. Where's my mouse? Let me go to that tab. Where'd it go? Okay, cool. So, we are looking, and I need to put it on the 5-year chart. Okay, 5-year. Should be able to blow it up bigger than that. No, that's not what I intended to do. Dang, guys, hold on. I had my chart set up and everything. Hopefully, it comes up the right way. All right, let's see if we can get it. Cool, came right back like I wanted it to. Okay, great. So here's a chart of Bitcoin, and as you guys can see right now, it's getting obliterated. And actually, this is the max. Okay, no, this is a 5-year chart. A few things I want to point out. I want to make sure you guys can see. So I talked about this. I do a couple of these. I haven't done one in a while. I thought, with everything that's going on in the market, it's probably important that I update you guys about what's taking place right now. Let me pull this up. So if you look at this chart, I think I talked to you guys about this. I know I talked to you about it before. So you got a purple line. The green, if you guys are looking at your screen, the green number is where Bitcoin is currently trading right now. So 28,654.78. If you're looking on the right side of the screen, there's 4 color-coded numbers. The 28,000 is where Bitcoin is at this very moment as I record this, May the 12th, 2022. There actually is going to be some good news coming out of this. But, Bitcoin is entering into uncharted territory, and I'm going to explain why. So, really quickly, it shouldn't have done that. Okay, here we go. The purple line, just for clarification, the purple line and the purple number is the 50-day moving average. The blue line is the 100-day moving average, and the red line is the 200-day moving average. And this is over a 5-year period. What we see is that Bitcoin has clearly broken through the 100-day moving average. The next level of support is going to be the red line. So the blue line, the 36,437, was a clear break through support at the 100-day, the 5-year 100-day moving average. So that is going to tell us that at this point, and this chart has been pretty accurate based on my understanding and reading of just very fundamental technical analysis. So the 200-day moving average, if you're looking at that red number over here on the right side of your screen, is suggesting that the next level of support for Bitcoin is $21,858. Is it going to be that exact amount? I can't say for certain, but it's going to be in that general area. So that's the number you want to pay attention to. The unfortunate thing is Bitcoin's at 28,000. If it falls to 21,000, then that's going to be another, let's call it 30% drop from where it is before we get to a level of support where we feel confident. Now, for a silver lining, a little hopium for everybody out there, if we look at the previous bear market, the 2018-2019 bear market, so if you go back here, we peaked at the end in December of 2017. This bear market was a little bit different. Bitcoin dropped probably about 50%, and then it kind of traded down slowly over the course of the next really year until the end of 2018. So we went from 20,000 to about 9,000 in 2 months. And then over that next 2 months, over the next 10 months, you went from 9,000 to 3,000. A little bit over 3,000. And then at that point, that was the bottom. So what you want to pay attention to as you look at this chart is the red 100-day moving average. Over the last 5 years, that has acted as significant support for Bitcoin. So we had an extended kind of dribble along that 100-day moving average. If you look at it from December 9th of 2018 through so basically about 3.5 months, or 3 months. So it's December 9th through March the 24th of 2019. We really bounced along the bottom and stayed right there. Now that's a good sign. We held that support, and then Bitcoin bounced off of it. Really good. 2019 ran back up to like 11, 13,000. That was kind of a fake out. And it could have been ready to take off then, but COVID happened and it dipped back down to like 5,000. And then, of course, we got the bull market that we are currently exiting. And so the hopium, the silver lining is that at least over the last bear market, the 200-day, 5-year moving average has acted as really strong support. So if that continues to be the trend, then the $21,858 could be a strong support level for Bitcoin. So excuse me. Hate to breathe a bear of bad news here, but it is what it is. You got to keep it real. The good news is this is going to create the opportunity of a lifetime for a lot of people who are just trying to study and get into the crypto space. There's obviously been several things happening within crypto where stuff is blowing up. Apple and Microsoft are trading down. I'm going to show you guys. That's really the only thing that was propping up the stock market for a while. Apple and Microsoft are two huge companies, as well as Amazon, but Amazon had already started to roll over. But we're going to take a look at this stuff, guys. Now, this reminds me of 2007, 2008. So for you guys don't know my backstory, I was heavily invested into stocks, and I still trade and invest in stocks. But I enjoyed it and loved it so much so that I quit my job that I had at the time, and I literally quit at the top of the market. Now, of course, at the time I did not know that was the top of the market, but it was. And I got my butt handed to me. But what I recall vividly was that during that time, you get these really sharp rallies that have you believe that you're going to bounce back. Now, in this instance, the stock market and crypto have effectively been down since January. Like it's been all bad for essentially 5 straight months. From January to May 12th, there's been no reason to buy stocks or buy crypto. Everything has gotten crushed. A lot of that has to do with inflation. And I don't unfortunately believe that's going to change anytime soon. In fact, I was just out and I was at Marshall's on a random Thursday in May the 12th, and it was like the weekend. Like people were out, the line was snaking around, like out of the normal place that you have to stand, going like down into the men's department. And I'm like, oh, okay. And it's not bad, right? That's keeping jobs. You want demand, but here's the thing. Drop some truth bombs on y'all. That's kind of my opinion, but just hear me out. Um, Capitalism is free. The free market capitalism system is what we have, but it's not fair. It's not designed for a lot of people to have a lot. And so when the government pumped all this money into the system via stimulus checks, via the PPP program, via the SBA EIDL program, all these different packages, and most recently the infrastructure $1 trillion infrastructure deal that just went out. There's a lot of money circulating in the economy. When people have money, when their investments are going up, everybody feels good. What was interesting about COVID is that the government really used a bazooka to try to avert what people thought would be the next Great Depression. So they dropped interest rates to zero. The Fed funds rate essentially went to zero, and then they put all this money into the system. So as you guys know, over the last, let's call it beginning, 2020, right when the government made those decisions to do what they did with the stimulus packages and everything else that came with COVID relief, people began to refinance homes. Real estate started hitting heavy. The reason that's significant is because prices started going. As people were selling their homes, they were also buying homes. But you also had to understand, like, people were walking away from selling their home with 6-figure plus checks, even after they put a down payment on a new house they bought. And if you're single, the way it works, if you own a home and you sell it, if you make under $250,000 on the sale, that is not taxable. If you're married and you make up to $500,000, the first $500,000 is not taxable. So people are sitting on hordes of cash. And so you got cash. People on the very bottom end are being pinched. Gas is killing them. All these increases in prices are killing them. But for people who have cashed out, excuse me, cashed out, sold their home, flipped homes, all of this, which is great. You're winning. But typically what happens is when gas goes up, you see a lot of people like, man, it's crazy. It's not really happening like that because a lot more people have money. And again, free market capitalism is free. It's not fair, or it's not designed to have equality across the board, because some people tell you that's socialism. So I say that to say, as more people get more money, demand's going to go up. And right now we have a situation where demand is skyrocketed so much. The supply, we're already having supply chain issues. We're importer nation, meaning we ship in most of our stuff, a lot of it from China, who has very strict COVID protocols. And so that's disrupting the supply chain. So things have to go up because demand is so high. And so It's a rough situation. It's weird, but again, it's a free market, not a fair or equal market. So prices have to adjust to keep the tiers intact. As more people make more money, as more money enters into the economy, inflation will take place to adjust. Now, people can still be doing well, but the inflation will adjust to keep upper class, middle class, lower class. Those tiers will still exist. There can't be no lower class. It can't be a situation where there's no middle class. Like inflation, the way that it's designed, the way the system is designed, all that stuff is going to always be intact regardless of how much money people get. If people on the low end become millionaires, let's say everybody in the country is a millionaire. It's never going to happen, but let's just say, hypothetically speaking, everybody in the country is a millionaire. What does that mean? That means that we would have extreme hyperinflation. So being a millionaire wouldn't be much different from your life now because you go to the store and a box of cereal costs you $570. Just throwing something out there, but it'd be some astronomical price to the point where you wouldn't feel the wealth effects of being a millionaire. Everything would have to adjust. So right now, billionaires are put on a pedestal and enamored and like, man, how you get that, or how did she pull that off? Like you basically, like a trillionaire will be the new millionaire. Oh, the new billionaire, and being a millionaire will be like, making six figures. I'm not saying that's where we're headed. I'm just saying like that's how hyperinflation works. That's how inflation works. That's how capitalism works. The system, the prices will adjust to make sure the tiers of upper class, lower class, middle class remain intact because they have to in order for the system to be functional. Okay. Kind of jumped off on a tangent, but hopefully that made a little bit of sense. Uh, hey man, if y'all find value in this, go ahead and smash that like button for the YouTube algorithm. Appreciate subscribe and make sure you smash that notification bell. Uh, that's greatly appreciated. Take a hit of this water. All right, so let me show y'all Ethereum. I'm gonna show y'all Ethereum, Apple, and I probably pull up Tesla too. Ethereum, Apple, Microsoft, maybe Tesla. I didn't want to make this video too long, but it's been a while, and I wanted to really break some things down. So that's what's going on with Bitcoin, y'all. Now, the title of this is that we're just getting started. There's people, economists, there are people who believe this is going to be as bad as 2029. Like, there's a guy that's calling for stocks to drop 80-90%, which means if stocks drop 80, crypto has only seen a bull market. COVID was actually, while it was technically a recession, it was the shortest recession. It was really just a pullback. By definition, we entered into a recession, but because of the government's actions and measures with the stimulus and the PPP and everything else, it really wasn't a recession. So while I thought that Bitcoin had been tested, which it had been, I did consider COVID a test. This is going to be an even bigger test. We're going into a period that what a lot of people believe is stagflation, which is basically higher interest rates for a considerable amount of time, as well as low to no growth. Typically, what you have is the government, when we go into low growth and no growth, the government stimulates the economy by lowering interest rates. But because there's so much cash that was dumped out there, they're trying to absorb the cash, or at least have people think about, like, maybe I shouldn't buy anything, or maybe I shouldn't spend this. And in doing so, they have to essentially like jack up interest rates, which is going to have an adverse impact in the housing market. It might wreck the housing market because at some point, you get priced out of your home because the mortgage is too much, or priced out of your price range, and then you're just sitting on hold at that point. But let me show y'all a little bit more here. Let's see. All right, let me get that pulled up. No, here's ETH. All right, so we're looking at the 5-year chart on ETH. Same thing goes here. The green number is where it's currently. Hold on, let me make sure I got this right. I don't know if it pulled up correctly. ETH isn't trading at 2,800. Something's off with the ETH chart. Here we go. So ETH is currently trading at $1,940.75. As you guys can see, ETH has fallen through the 100 the 100-day moving average, which is the blue line. The next level of support is $1,164.30. So if you're holding ETH, it's probably gonna get a lot more worse before it gets better. Unfortunately, based on this chart, hopefully it's wrong. Probably not though. And again, if you're gonna believe the economists or the people who are saying we're coming to the end of this super bull market, this 90 years, some people believe. So let me step back a second. There's a guy on YouTube who's a Harvard economist. His name is Harry Dent. Does some really good work. He's been a contrarian and a bear for quite some time. He does a lot of demographic work. And based on his research, just kind of regurgitating what he said, or at least giving you a summary, paraphrasing, he says we were in a 90 year after World War II, we entered into an 90-year bull market period. So all the crashes and things that we had between them were all like just secular, like pullbacks and recessions. They're normal, they're healthy essentially. But if you look at the stock market over a 90-year period, you're gonna see this trend upward. Well, he's saying we're coming to the end of that period, and we're looking at another 1929 style depression, or at least tank in the markets. I hope he's wrong, but you can go to his channel. You can listen to. He's been on several podcasts, so you can listen to his work and make your own decision. But he makes some valid arguments. You can also go listen to Ray Dalio, multi-billionaire who thinks the U.S. in general is coming to the end of its superpower reign. He makes some interesting and compelling arguments. Anyway, looking at ETH, you got another 30-40% drop, almost 50% drop in ETH if we go from basically what's 2,000 to, let's call it 1,000. It's rough out here, y'all. It's rough out here. So I'm just letting y'all know it is not to say that it can't blow through that 200-day. Unlike Bitcoin, ETH doesn't have as much data to look at. So ETH it's just not the best setup for a short term. Hopefully you guys got some cash and some powder dry to jump in this market, because like I said, I do believe on the other side of this, it's gonna be amazing. Another thing I like to add is typically with the crypto bear markets, the last few of them, and I think I mentioned it just a second ago on the Bitcoin chart, normally the bear market lasts for 18 to 24 months. It basically starts once the bull market ends. In this case, most cryptos saw a high back in November, like November the 7th. It's basically the absolute top. And so, the bottom typically happens 3 to 6 months after the top. And then we stay in kind of this prolonged either sideways movement or still some downward pressure for another, let's call it 12 to 18 months. That'll bring you at a 24-month mark where we get toward the Bitcoin halving in 2024, which typically is the mark of the next bull market. So that's what we're looking at with ETH, guys. Not good news, not looking good for ETH, and doesn't appear we're going to get any bounce, especially when you look at what happened with Terra Luna. That's been a complete debacle for the crypto markets. But Let's scoot on over to Microsoft and see what they got going on. All right, so I'm gonna look at the 5-year on Microsoft. All right, so one thing I like to mention is I believe that the market is extremely oversold, but that doesn't mean it can't continue to go down. People are really concerned about inflation and growth going forward, and to have both of these here in an interest rate. Normally, what you have in a slowing economy is the government is lowering interest rates. They can't do that now because that's gonna uh, add to the inflation issue. So now we have a economy where growth is slowing, demand is still high, and the government is having to raise interest rates. So again, the stock market is a forward-looking mechanism. So it's going to look out into the future and say, okay, what do we believe is going to happen? On either side, it tends to overreact, but this is where we are. Well, this is where we are right now. So just kind of add a little bit of flavor to this chart. We're looking at this over 5 years, guys. And this is Microsoft. One thing I think is important to point out is that Microsoft essentially over the 5 years has been in a really strong bull market. And even during COVID, if you look at Microsoft, it actually only hit the purple line, which is a 50-day moving average, bounced off of it cleanly and continued on this bull run. Excuse me. In this particular case, not only have we crashed and fallen through the 50-day, we've officially fallen through the 100-day moving average, which the support was at $260. So as it stands now, and I'm just going by the charts, the next stop, the next level of support for Microsoft is $197, basically $198. That's scary. Microsoft falls to 198. That's going to be a lot coming off of the indices in the stock market, and inevitably that's going to impact crypto because the stock market and crypto have moved in tandem lately. Let's take a look at Apple, see what's going on here. Now, oh no, Apple's in trouble. Try to refresh my screen here. It's not showing the right price at the moment. As you guys can see here, Apple's trading at 139, but the green number is showing 157. Let me move this out. What in the world? Okay, here it is. All right. So we're looking at a 5-year chart. Apple has fallen through the 50-day moving average, and then it's pretty much touching the 200-day moving average. So let's say the 200-day moving average is 140, 138. So it's right there. If Apple falls through, let's say Apple gets to $125 a share, or it just breaks through this, let's call it 138, 137 level. The next stop is $97. $97. And so we got to hope for some support there, but that's a significant drop given that the stock was just at basically $180 back in December of 2021. So the biggest players, the FANG stocks, are getting destroyed, and you can bet your bottom dollar crypto is really in a .com bubble stage. So a lot of projects, a lot of things about projects are gonna disappear, and a lot of wealth is gonna be destroyed in the process. The beautiful part about it is, if you've been able to keep some money available on the sideline, you're going to see exponential gains, I think, over the next, let's call it 3 to 5 years. But in the short term, we are in some huge stuff here. And I didn't want to say stuff. I kind of kept the thing PG. Let me see if I can pull up Tesla, and that'll be my last stock. This video has gone longer than I wanted it to, but that was important to bring this up. Okay. Tesla still isn't showing the right amount. Okay, it's showing it a little bit better here. So Tesla, this is Counter the chart. This is not a 5-year chart. Yeah, so this is not a 5-year chart, but as you guys can see, and I probably can blow this up a little bit. Uh, if it'll let me. Will it let me? I don't want to update this now. So I made it a little bit bigger. Hopefully you guys can see it a little bit better there. But essentially what we're looking at, Tesla is trading at $711 and $712.01. You see it right there at the top of your screen. Um, that green real-time indicator on the right side of the chart is a little bit delayed. It's showing 711. What you basically need to know is that it's already crashed through the 50-day moving average and has touched the 100-day moving average, which is roughly about, let's call it, $712, $710, somewhere around here, between like 712, 710, 705, something like that. Here's the concern. If Tesla clearly breaks through that number, then the next stop is $390, which is basically close to another 50% drop from where it currently is. So hopefully that's not the case, guys. But, I'm just bringing you the information so you know and you can be prepared. Again, it's all about perspective and how you look at it. I'm of the opinion that, hey, you're about to get deals in the stock market just because what's happening with inflation. I think in the next 8 to 10 years, about 2030, and this is just pure guess and speculation on my part, I think we're going to see most Americans have at least one electric vehicle. So the EV space is going to continue to grow. Tesla's the juggernaut in the space. And so I think this bodes well for them because people just don't want to have to pay ridiculous amounts for gas. So yeah, man. Sorry that I had to deliver the message the way that I did, but I thought it was important. You keep it real with your community, let them know, hey guys, this is what's going on. This is what you can expect. And that's essentially what I did. So if you guys have any questions, comments, or concerns, man, please drop them down in the comment section. And again, go ahead and smash that like button if you found some great content, and share it with a friend or family member who may be interested in crypto or investing. So, y'all, I appreciate the love and support. And until the next episode, peace and blessings. I'm out. Y'all take care.